I will pass the baton over to Randy. Why did I say Randy? Manny, to say to talk about his plan here. But that's just my outline in terms of the cycle range. All right, cool. All right, just one note. Everybody here in the PTG room should also be hear me as well. Yeah. So again, I'm broadcasting today in both rooms, PTG and Pit Room. Okay, in advance, of course, of our webinar this coming Saturday. Um, my slot so far, this at least for March, is Wednesday. So when Manny is speaking, my mouth is closed, so I don't speak over him. All right, so that's why you didn't guys didn't hear me in the in the PTG room. But to Manny's point, all right, we have just I have a multi-time frame chart as well, and this is something that I've been talking about as well. Now, Manny put out a piece on the opening print there, what 2 days ago I think, or was it yesterday, about the Wyckoff chart and everything, distribution, right? I've been actually talking about this about like 3 or 4 weeks now. On this particular chart, we, remember Manny, I was talking about that dumpling top type of pattern, right? And so you can clearly see here that the days that the selling has occurred, we've had higher volumes than the retracements on the buy days, right? So this is clear evidence of distribution. Having hit the 65, 85s down here back in November low, obviously we get a very nice bounce, off of that, which, is not to be not expected. I mean, but down at those levels, that's not where the big institutions are going to want to be, doing their distribution, right? So they really cut off their own selling down at those levels. I mean, some people will do it naturally, but for the most part, collectively, the big institutions are not looking to sell, down at those levels. So, naturally we get this rise up. Now, from this point, like Manny says, either, kind of we can get this rotation back up still, or, if there's a new leg down to retest, that break, right? So that's going to be kind of, in the upcoming days. And I guess a lot of this is still going to be predicated on what happens, with the Iran situation and whatnot. So just obviously fluid situation there, um, but I would not be surprised, if you would, again, we don't have time to go into it, but on the daily, if you take a look, if you really go back quite some time, there's been several of these kind of distribution type patterns that resolve actually back to the upside. All right. So something to kind of maybe want to research a little bit, backwards wise. And again, quickly on the weekly, all right, Manny mentioned the weekly as well. So, the weekly is right around the 50 period moving average on the weekly. So, again, we should be, the expectation of support in that area is obviously important for the market, so just to kind of add on to what Manny was saying with this chart. So good, all good. So today we're just I'm expecting cycle day two. I'm expecting kind of an MATD, market a morning after trend, uh, to a type action. So we'll see what we get here in the opening in a few minutes, in a minute or so. All right. Yeah. Hmm. Yep. Yeah. And for those in the PTG room, again, you don't have to be in the pit room to hear Manny. All right. What you can do is go up into the media tray and select Manny's little name tag there, and so you can listen to him as I'm speaking. So when I stop talking, Manny may take the mic. So just kind of little procedural protocol type stuff. So to make the get your experience the best. Sometimes I'm going to be quiet, and Manny will be talking, vice versa, and so forth. So for those of you looking at a trade on deck here at the A10, right around the 6803 handle. We're looking for a move, a touch up into that area, and hopefully a reversal if the market responds appropriately. And given the type day and where the location is on that, it's up just above the edge of the upper profile edge. Could be a good, reversionary type trade if it tags it up there. All right, so uh, something to keep in mind if you're scoping a trade up at around the 6803 level, and we'll be doing that here as well. Nice. Nice, nice, nice. Yeah, just one final note about, what I'm talking about, and what Manny's talking about. Again, we have a lot of parallels, right, to our analysis, but obviously we take different paths and different trade selections. Um, Remember, all the stuff that we're doing is kind of just essentially for advisory and educational purposes, right? There's no, we're not anybody's specific advisor and taking recommendations. So we're just telling you, kind of showing you what we're doing, what we're looking for, and so forth. Really, at the end of the day, you all need to take your own trades, follow your plan, develop your own plan, and so forth. So that's just kind of a general disclaimer. I think everybody's does is aware of that, but it's good to just kind of keep that in mind. You know, I will point out, as all of our members know, areas that I'm looking to take, what the next kind of setup will be looking for. So as I just mentioned a few minutes ago, up at the 810 area, 6803. You choose to take it or not, your choice. It's not a mandatory, that you have to take any of these trades. These just, again, kind of heard advisory and educational and guidance perspective. So just it's always good because we're not, none of the stuff that we're going to be doing going forward, in the pit room with the pit funding and so forth. Again, this room is going to be supportive of the initiative, the pit bull trader funding initiative. So this is all going to be supportive of that, but we're not really going to be trade calling kind of service at all. I've never been here at
Today's
PTG.
number,
So
guys.
and I don't think really, I think in the scheme of things, members really are not looking for that, but they are looking for guidance, and that's something that we're obviously going to continue to provide. So Yeah, I'm 100% with that. And that's been my approach for years. When I was learning in the business, nobody ever gave me trades, to make me successful. And even if they did, let's just say that they did, which they didn't, but let's just say they did. I mean, it kind of feels okay. Short term feels good, made a few bucks, but really, it's incomplete. It's like what Manny just said. It's like, well, what happens if you're not there? Oh my God, Manny's not there, or David's not there. Like, what do I do? Well, that's the key. What do you do? Right? You're gonna end up falling back into probably some old bad habits, and it's just gonna continue. Right? So if you learn, what's behind the shiny car and the shiny engine, how it works, well, you'll be able to drive it yourself. That's the whole idea. I mean, it's, you know, and that's obviously something that I've provided for years. So, and I show everybody how to do things, or, what's underneath the hood. But at the end of the day, we all have to, execute it. Because yeah, you could give everybody the exact same trade, timing, the whole 9 yards, and everybody will be different because they're going to manage it differently, and so forth. So, um, but yeah, I mean, the analysis is universal. Kind of staying in a, again, our primary directive, is staying in alignment with the dominant force, right? And taking a trades, according to that, given the structure and so forth. Um, so yeah, all good, all good. So yeah, we're all looking at the same area around the 6800s, 05s, 03s. Uh, for me, I'd like to have, a tag there and a quick reversion back, a fade. So that's what I'm looking for, but I don't want to see it just jam through. So, I mean, I'm looking for a short sell against that area. That's what we're looking for. So, but you're a good lower, so you're in great shape either way. Yeah. Well, I'm looking to fade to get paid. Right? Fade to get paid. All I need is one. I mean, there is some accumulation that's ongoing here. You can see the bid-ask volume ratio, right? It's been steadily, buying. But that said, we're not really taking off. So at this stage, we can identify some steady buying, but it doesn't appear to be enough, to spike it up. So is that absorption by the sellers? Could be. If it resolves lower, you could then say, oh yeah, that's absorption by the sellers. You know, it's always after the fact, but again, I like to look at in real time, like what is happening most recently. So there's been, again, fair amount of persistent buying, but of course that's matched up with selling, and the markets really hasn't gone any made any real progress. So, but what you don't know is, what the makeup of the longs and shorts are in there. You can just make an assumption, inference on things, but just know that that's a high volume area. Clearly, that's well apparent. And then what happens from that point? To me, it looks more like the buyers are just getting stuffed because of the lack of progress. But we'll see. Isn't let's see. What's the other thing I want to look at? The clock. Yeah, the clock. The infamous clock. It does. Oh, did you get the Epic pen? Oh, excellent. Yeah, I can't live without it now. Oh, I had to learn how to write with a mouse. You have to go back up and click the arrow to get out of writing mode. Hours of boredom and moments of stark terror. Absolutely. Sheer terror. Yeah. It's like when the yoke comes off the steering column and you're looking for that Phillips screwdriver to screw it back on. Yeah. Another thing, just you mentioned something about P&L and stuff. I do not look at my P&Ls throughout the day. I don't have I don't pay attention to them. I think it's regressive mentally. So if you're staring at your P&L, you're trading your P&L. When I was a market maker, heading up the biotech healthcare group back at UBS days, as a sector leader, I had 8 traders, that I was underneath me in that group, and I had the master P&L for everyone, and not one of the traders on their own stations knew what their P&Ls were in live. They had an idea whether they were doing well or not, but they didn't actually know the number. And that was by design from management, that all that management wanted to do was make sure that the traders, the market makers, were focusing on the trading, the process of market making, okay, and not worrying about whether or not they were having a good day or not, or what the actual P&L was. So, if you're somebody out there you're constantly looking at your P&L, uh, my recommendation is take it off your screen, right, and look at it. If you want to look at it midday or whatever. But the point is, I don't look at it at all. I actually have to go look at it to look at it, so it's not sitting on my screen, passively. So I think it messes your head up, you know. Yeah, just focus on the performance, just focus on your trades, just focus on, what trades that, you're looking for, just put them on, and don't worry about the P&L. Hey, I made, 5 points, I made whatever, okay, you did well in that trade, right? Why do you have to look at the P&L on that? I mean, you did okay on it, so move on to the next one, and then so forth and so on. I just think it keeps you focused on your process, not, you know, not the P&L. I mean, everybody has to learn that. I mean, it's easy to look at your P&L. Oh, how you doing so far? It's like I always say, yeah, I'm okay. I'm doing okay, and or I don't. Again, it's just not something that, um, and I just carry that forward from my days when I was, management at UBS. Um, and nobody knew what the other traders did not know what their P&Ls were, so they just focused on the job at hand, and that's the same thing. That's just the mentality that I carry through with myself. So, and you see all the people on ScrewTube, they're just constantly putting out their P&Ls and so forth, which is again, one thing that PTG is not is, word of the day, braggadocious. We don't brag about anything. We're just yeah. Yeah, exactly. So we just keep our heads down. But, there's a lot of people that, I mean, there's one thing about, marketing, and trying to attract customers and so forth. I mean, there's always kind of this fine line that, I've always kind of towed between, what do I put out for marketing versus not being, braggadocious type of thing, and it's not an easy line to follow, so. And of course, since I'm a registered, CTA with the NFA, I have actually more restrictions on advertising than the somebody that's not registered, and out there on ScrewTube and on Discord and wherever, they can just make a lot of claims that you know could be suspect. But then there are a lot of those that are showing their P&Ls, and I give them a lot of credit, that they do that. And the transparency is getting I've found it's getting greater and greater across the spectrum, which is a good thing. You know, people do want to have a level of honesty, in this business, and that sometimes it's hard to come by. But um but in any event, in terms of your own, looking at your own P&Ls and so forth, that's really what I'm kind of referring to. All right, I'm still looking for a short if we get a bounce up here, so nothing has changed. Mm. I think for some people, it inspires them to push forward. I think for others, it may, be more of a negative influence. You know, and one thing you don't have with most of that stuff, and again, unless somebody really is truly transparent and shows, their expense side of the ledger as well as the payouts that they receive, from the funders and stuff. You got to have the whole picture, and a lot of people don't show the entire, picture. But and interesting, I watched a video last night, a clip of Linda Rashke, and she was being interviewed, and she said something that was very interesting, that I picked up. I mean, I've heard watched many podcasts of her, and so I kind of know her style and the whole thing. A lot of stuff that she does is, I kind of learned the same way. We're the same age, and we kind of went kind of a lot similar kind of training in the early days. But so there's a lot of parallels to how I think and how she thinks. But one thing she mentioned was just kind of I found interesting. Um, she said somebody that wears a watch on their left hand and on their right hand, or two watches basically, right, cannot tell time. And I kind of like, what, right? And and I'm not talking about, one's New York and one's London. That's I'm not, two watches, same time, but two watches, they can't tell time. And it's really a metaphor, right? And the metaphor is, and I picked up on that, but the metaphor is that, people that have one watch can tell time. People that are wearing two watches cannot tell time, right? And so the metaphor simply is, if you have your own methodology and you're paying attention to, the work that you've done on your own, all right, And yes, it's good to at times to be listening to somebody else, but the problem is you can't be listening to one, okay, person, you know, or you can't be listening to two different people, right? And trade your own stuff because everything just conflicts. Everybody has an opinion, everybody has a viewpoint. And so, you have to settle in on what's your viewpoint. I mean, you can take in information, but and formulate a viewpoint. But once you have a viewpoint in a method, that's to your style, right? You got to stick with it, all right? And it doesn't mean you don't entertain, others, but you can't be looking at two watches at the same time. You can't be looking at, can't be listening to opinions, which then it ends up stifling you from making a decision because you're thinking, well, maybe that guy's right, or maybe this one's right, maybe I'm wrong. I could be right, and it's a mess, right? So, but if you're looking at one watch, the metaphor there is, I know what the time is. In other words, I know what um, I'm going to be doing in this situation. I know what trades I'm going to be looking for. I know how I'm going to be managing those trades. So it's kind of an interesting metaphor, right? What was it? Jason Shapiro? Is that what it was? Is that the guy's name? Okay, Jason Shapiro. I guess one of the folks here says. Yeah, I saw that. I was watching that last night, and that part of the interview just struck me because I had never, that metaphor never. Um, so it was kind of interesting. So, the point is, even myself as an educator and people kind of learning a lot of the stuff that we do here, um, even once you learn this stuff, you still have to, you know, take the pieces of it that resonate with you and then work with them. I mean, and you can't be taking stuff from us and then three other people, and and it just becomes a mess. So just kind of an interesting metaphor. That's all. Just wanted to highlight that. Something that was new to me, and I've been around for a long time. I just never heard that before. So, and I've heard Linda's um, interviews many times over. So, uh, okay, cool. All right, was just kind of we're getting this MATD, market or morning after kind of trend type of activity, kind of two-way consolidation is what we were anticipating in our daily trade strategy. And certainly we're getting that. One thing that I like to kind of use as kind of a descriptive is I talk about a sandbox, right? This is the sandbox, and basically the sandbox is just outlining, a high or low range, and this is where the activity, is more likely to be until prices break above or below. So what's the current sandbox? That can change, but as the day unfolds, of course it will. But one of the defaults is, if you're trying to determine, what a sandbox is or what the sandbox could be at the moment, you can always default to the uh, current developing value area. There's your break, Manny. There you go. You got it. You got it. It blew through here. I didn't even get a trade off here. It blew through. So yeah, I was looking at that. I'm saying that this thing's gonna go. This thing's gonna blast off. I could tell. I could just tell. It just they pushed it lower and down to the 75s, and then they started creeping up. Just now, it's gonna go this time. So there it is. So you're still on it. Good. Yeah. Yeah, I could just sense that's just gonna blow. Yeah, I think that go ahead. Yeah. No, you're right. I was just saying that, a lot of times, I mean, they just, they know that there's stops above there, it's been kind of nibbling at that level for quite some time. So they just, all right, we're just going to go jam it. And, that's what the market makers do, and it's not just the market makers. Some of the institutions will do that as well. They'll force a move. It's not just market makers all the time. I mean, we kind of drill it down to market maker activity, but a lot of times the institutions will go out and force it too. Why? Because they can. I mean, and the futures are so much easier to manipulate anyways. And again, it's all what the order flow, collective order flow on the books are. And they know what it is. They think, okay, there's not really a lot for sale up above or anything. All right, let's go jam it. Yeah, you know. I mean, yeah, yeah. I guess there was a Trumpism that went out there just a few minutes ago. Yeah, something about he said something to the effect that tells Axios Iran war will end soon. Quote, anytime I want it to end, it will end. So, yeah. Dr. Dean, if you have an echo, it could be that you have two rooms open at the same time. You may want to check that. That's usually the case. You have two iterations ongoing. If you want to keep two open, what you want to do is shut off one of the mics in the media tray. We're learning how to use this system too. This new system Marlon created. I think it's really good. We're going to be able to there's going to be a lot things going on. We're going to be able to speak. directly with one another in private messages, right? We can hold kind of personal sessions right through the system. That's being developed. Also, we're going to be able to broadcast to ScrewTube as well. So there's a lot of stuff that Marlon's putting together in the architecture here, and being able to broadcast in several rooms simultaneously, as well as sharing in several rooms. Uh, Again, over and beyond some of the systems that are out there, but since it's all proprietary, um, done a really good job. So, I mean, guys, you don't understand how many hours he puts in. I mean, 25 hours a day it seems. He's just never ending. So get back to work. No vacation for you. All right, look at that pop, right? Just so that was probably the Trump quote, just to jam everybody, and then right back to where we were. So, that's nobody can forecast that. Nobody. Remember the initial tweet bombs that Trump used to lay out in his first administration. I mean, you know, at any time an IED could go off. Trump IED. You know, all right, back to center base, home base here. I'm basically neutral at this stage. We do have an A10 long here, just about to click off. Order is staged on this pullback. Did not get that short off. It blew right through the trigger. This one did trigger, so we're long right now off the A10. See if we can get a bounce. Come on, Seabiscuit. Yeah, on a day to day, like intraday, like this type of activity, I don't. All right, because the ranges are, I mean, though the ranges are wide, right? From trade to trade, I'm not really, I mean, I can't say that I don't, but what I need to do with the micros is I need to at least do five, so half a mini, right? I mean, I don't do one or two micros. It's just kind of, to me, it's a waste of a lot of energy. But the when I like to use a micro is if I'm at like a lower or upper edge of a bigger range, and I want to play for a bigger range play, right? So I'll do some micros, manage my risk much better. It's like what you do, right? You're going for 10, 15s, 20s, bigger moves, and micros, can certainly, be a good way to go managing, overall risk profile. So I mix them up. I mean, I can't say that I don't use them, but it's just kind of depending upon the situation of what kind of play I'm, like if we get a deep, if we get a deep, like for instance, like a deep, one of the plays I like is a break of, like today would be a cycle, like today's cycle day two, but if today was a break well below the cycle day one low, I know based on statistical, the cycle statistics, that there's a, we have a 92.5+% uh, chance that the market's going to, get back above that cycle day three. So in a case like that, when we have like a deep low, like Monday, for instance, right? So there were good opportunity like Monday where it went all the way down to get that overnight break, 65, 85, and then during the opening, kind of stabilized, all right, and so forth. So I was again, I was anticipating kind of this move higher, right, for some sort of a recovery. So I played some micros on that, and again, I could just manage risk a little bit better with the high end of volatility. But in order, but for me to make it worthwhile, the move has to be significant, for it. But I'll leg into 5, so half a mini. I remember back in what was, I guess it was during the financial crisis where we were going 90 handles at a clip. I remember back then I said, "Gee, wouldn't it be nice to be able to trade like a fractional mini?" Okay, and because even putting one contract on it was well beyond my risk parameters. All right. So I just sat there and watched. I didn't do much of anything in that wild time. Because it just one contract just, the percentage ratio of my risk profile, was well exceeded. So it's all right, can't do anything. Just can't do anything. But I said, boy, if we had like a fractional mini, didn't know it would be called a micro, but at the time, but I said, boy, if we could trade a fractional mini, I could buy one, call it micro, and run it 90 handles, 60 handles, 50 handles back and forth, and you know, uh, you can make a few bucks, obviously lose as well. But again, the point is managing your risk. So it is a tool that I do use. I don't have the only, I guess, long-winded explanation here is if we get a real big break to a level, I'll put some micros on so I can hold it for a lot longer and not worry about, stay within my risk parameters, you know, and not worry about, I mean, 10 points, these days can take you out in a heartbeat. 10 points in a micro or a few micros, I mean, you can handle it, without much problem. So I guess it's just scenario dependent from my standpoint. But like on a day like today, we're just kind of chopping back and forth, doing micros. I just, well, from my perspective, it doesn't mean that's right for everybody. It just, I'd rather just pick my spots on one or two minis, and like on one of the accounts, I mean, I was just chopping away on one mini, on one of the evals, and I mean, I'm like more than halfway home and just kind of chipping away on one mini, So with the wider ranges, again, you can certainly do that. But Yeah, no, I agree. That's you just gotta find ways of managing your risk profile overall. So that yeah, that's why I said in terms of I do use them. It's just it's I'm not exclusive to them, but it's just something. One thing I like to do as well, if I'm up during the day, and I've either reached my goal or near to my goal or something like that. And obviously we get, inherently we become defensive, right, on the next trade, on the next several potential sequences. But you also know that, if it's a valid trade, boy, I should be taking that trade, because it's a valid trade. And again, this goes back to what I was saying about you can't be thinking about your P&L, but it's natural that you do. I mean, that's just what we, as humans, that's what we do. We're defensive, right? But so, my question is, well, okay, so it's okay to be defensive. What's your plan for that? And like what you're talking about is you have a plan for that. I'm going to go, I trade the minis in the morning, and interesting how it is because when you start off in the day, like I always start at zero, like zero P&L. I don't care what happened the day before. I get zero P&L, but you have a daily loss limit, so you're willing to go down to a certain level on your first trade or several sequences, right? So until you hit your daily loss limit, and then you're done regardless, right? So whether it's the trade you're taking or the market or whatever combination, and so though you're willing to risk n- right from the gate, right out of the gate, okay, once you start having P&L and you've done well and you're up, it's interesting that you're not willing, most people are not willing to risk anymore because they made it. They they have something in the pill. And in actuality, most people, again, some of the professionals out there would say, well, that's the time you start pressing, and and if you give it back, you give it back, but again, what happens is most people says, okay, I'm up $1,500. I don't want to give it anything back. So, okay, if that's the case, for many, then what's your plan for that? Well, you have a plan for that, right? Okay, I'm going to switch over to micros, and I'll still take some trades, but I'm not going to, And so the idea then, what I say is, you have to have a trailing stop on your account. Okay, so let's just say you're up a couple thousand for the day, and let's just call it that's your goal. You're up a couple thousand, and you're trading well, the market's rhythms are intact, and then you get another method trade that comes your way, but you're afraid to take it, right? Because you don't want to give anything back. Well, what how I've come up, to terms with that is, okay, if I'm going to risk $500 on the next trade, okay, then I'll risk the same, $500 for the next trade. And if I give back, but I don't want to give back more than, I want to walk away with $1,000 on the day. That's my stop loss on my P&L for the day. Okay. And again, this goes beyond what I mentioned about not looking at your P&L. I mean, you got to be aware at, certainly at times of the day, right? But the idea is if I'm up 2,000, I'm not going to give more than 50% of that back. So that allows me to take the next couple trade sequences. All right. Because I know I'm going to the feeling that you have, I'm going to walk away green no matter what. It is still a very good feeling. Now it's just how much green, but what happens if you take the next trade, and you make $500 or $700 on it, right? So now your stop loss moves up, right? Just like you would on an individual trade, do it on your daily P&L, right? Have a trailing stop loss, right? So, that's the way I've kind of, reconciled the fear of taking, not wanting to give anything back. Okay. And then, rolling over. But, yeah, that's just a suggestion. I mean, that's how I've kind of reconciled it is that, hey, if I'm up, a few $1,000s, okay, I want to be up more, on the next trade. Cause I don't know if the next trade, again, we're talking next valid trade, not just a Yahoo trade. So it has to be valid to the method. And if it comes your way, then I still would want to take that type of trade. If not, then I'm done for the day. I mean, you get to decide when you want to be done for the day, right? And walk away from the table. But if you're still going to stay at the table, then you need to have a management, plan for that. So a daily loss limit, I think most people have out of the gate, but do the same thing, use it as like a trailing stop, you know. And that, to me, that allows it takes some of the apprehension away from taking the next sequences of method trades. And hey, I'm going to walk away green no matter what, you know. All right, so yeah, this is all it's done is come back down and test the lower edge of the overnight range. So yeah, when you look at it, just it's just still within the context of yesterday's range, even on RTH session. So we're not quite it's not a, well, yeah, it is an inside day, but yeah, so MATD rhythm. So typical cycle day two for those kind of interested in the what happens in the various cycle days. I mean, this is something that this type of day rhythm is not unexpected. So um, so yeah, it's all good there. So guys, if you haven't signed up for Saturday's webinar, be sure to. If you need the link, let us know. Uh, TC 2000. Are you using the TC 2000 platform? Are you a TC 2000 platform? Yeah, that's the original platform. Oh, okay. All right, you're using TOS. Yeah, okay. Does anybody remember TC 2000? I remember it. Yeah, yeah. I thought that is it still even available? I don't even know. JB had TC 2000. I liked it back in the day. I actually liked it. Here's something I want to. I was thinking about not a few days back, but and the thought process I think applies, right? So take the scenario where you've been working on an eval, okay, and so you're working your tail off, right, and you're within striking distance of your eval, of passing your eval, whatever the size is, doesn't matter, right? Let's just say you're within 150 bucks, right, of passing an eval, and you've been working for the past week or two or more, perhaps, to get to pass that eval, right? So you've been working your tail off, and so you don't have much left to do to get to. But you come in on a day, start the next day, you only, 150 bucks to ring the bell. And w- you know, what I want to say is compare that scenario, right? Now, it's still simulation mode, okay? But compare that scenario to, evaluation scenario to Sim 101, which so in Sim 101 on your platforms, right? Not an evaluation, but basic Sim 101. There's 0 at stake for the same scenario, right? So I need 150 bucks. So what would you do on, think about your psychological, makeup there, right? And again, this is maybe different for everybody, but just it's good to kind of explore this. Is that in Sim 101 for the exact same scenario, I need $150 to pass, right? To achieve some threshold goal. And so Sim 101, and what do? You just forge ahead. You forge forward, right? You say, "Screw it," and you're just like, "All right, I'm just gonna go take the next trade or take this trade or whatever," right? And whether you achieve it or not, the point is that in Sim 101, there's 0 at stake, right? There's no consequence because if you lose, you lose, no big deal. If you win, you win. Again, really no big deal, right? But now move that same scenario from Sim 101 to an evaluation that you've been working on for the past 2 weeks, okay? Maybe you had to reset a couple times, whatever the case may be, but you've been working your tail off. Now you come in that day, "Oh, yeah, I only need $150 to pass, right?" I I think because now you have something at stake, meaning passing the test, right? It's harder for that to get that $150 mentally because it's something at stake. You don't wanna lose on it now. You don't wanna lose on the next trade, right? And, yeah, Peter over here says, I blew accounts out more than once like that." Yeah, because you just, now because there's something at stake, and it's not real money, mind you. It's just not real money. So we're not even talking real money. We're talking psychologically, right? That I wanna win. I worked my tail off, and then I don't wanna mess it up. Right? So you take the next trade and it's a loser and now you lose $300, right, on that trade, say. I'm just throwing out examples. Now what do you need to now I gotta make $450, right, to make that back. I find that, when you're on that edge of passing, right, and you've worked your tail off for such a long time, um, the difference between it's all a mental game here, right, most of the time, and now that you have something at stake, you have something to fear, right? Fear of loss because you've worked so hard, you feel as though you deserve the win, right? And and so unless you have really mental resiliency to say, screw it, one way or the other, I'm just going to take the next trade, right? Now, a lot of times you may find that because you're so close, you're just going to take any trade because you just want to get over the finish line, right? And so you may, and I'm only saying you may, not saying you will, but you may not follow your game plan, which got you there because you're so close. You're looking at the market. You say, "Oh man, I can make 3 points, on one contract. All right, I'm gonna go put that on right." And all of a sudden, the market just like goes right against you. And now, now you're in the hole. And then you look back and say, I probably shouldn't have taken that trade because it's not a method trade, right? Because you're so close, you're looking at the, the market, you say, I just want to get over that finish line because you just want to get it over with, right? And pass it, right? But you've been patient and for the past 2 weeks, you've been diligent to take those trades properly. Now since you're so bloody close, all right, is it's kind of this mental masturbation type stuff that you go, all right. No, it really is, and so, so this is and Peter just says it himself over here. He says, "I blew accounts out like that more than once," right? So, I know it happens that way, and I know people think that way. So, and just be aware of that because I have found the same thing myself where I've come close to an evaluation. And again, the scenario is like 100. You get the $9,000 goal. You're near the $150 mark, right? $170 mark, and and even if you take a method trade, that's not guaranteed it's going to work. But now, okay, now I'm down 400 or 500 or 600. Now I have to make it back, right? So it seems easy, but it's really all kind of this mental, you know, craziness that you go through. So, what's the solution? Just stay the course, just don't try to, you're that close, fine. You just say to yourself, I'm gonna get there, right? I still got time. I'm gonna get there, whether I get there today, tomorrow, whatever. I'm just gonna follow, my game plan and I'm gonna manage my risk the same way, right? And so don't get anxious if you're so close to passing an eval, right? Because you want to get it done today, right? Because you're so close. Don't sacrifice discipline, to try to just get something, over the finish line. You're going to get it over the finish line. You've proven to yourself to that point, by being diligent and disciplined, following your rules, right, to get you there. But I just find it's, because it's happened to me more than once, and in terms of like, what you just gotta say is screw it. I'm just gonna not screw it and blow the account, but meaning don't let that overtake you mentally and just say, I'm just gonna stay the course. You know, be relaxed with this stuff. It's hard. It's hard. I'm not saying it's easy. As many years I've been doing it, it's still not an easy game. So, yeah, yeah, yep. Yep. Mm. And avoid trading Friday afternoons. That has been my nemesis, trading Friday afternoons, trying to bring it home, and no, just that's why Friday afternoons, I shut the machine off at noon. I'm just gonna be my own worst enemy. You know? Yeah, JB says Fridays in general, yeah. I mean, you really just gotta take again, to me, I try to find, like, solutions, to things like that. It's like, okay, why does this Friday afternoon, or why does this trade, or why did is so important, right? It's the value that we place on it, right? It's what it's how we view it, okay? And, um, if you have a long-term perspective on things, then, just yeah, though you want to, it's the end of the week, you want to get it over with, you want to end the week, but what you don't want to do is sabotage Friday afternoons or Fridays as a whole, like what JB says, right? Yeah, he likes to be done on Thursdays. And again, his stats, like he posted, his stats say so. So that's good. Yeah. So if you know what your stats are, then lean on your stats, right? But the idea then is, you want to end the week, on that, positive, with positive momentum. You don't want to just, sabotage your week on a Friday when you're trying to just kind of finish up something that, that you could finish up easily enough in the next week. You know, then what happens is you go from taking that long-term perspective to, every win and loss, right? So then all of a sudden that next trade becomes larger than life, and that's where mentally, you really kind of just get hijacked, and so, you know, just, yeah, you got to have that plan. I mean, it's so easy to to just get caught up and get hijacked. You got to be aware, so you don't get you awareness is I obviously the mindfulness of that is the key, and then of course formulate a plan like JB says. He's done on Thursdays, win, lose or draw. Fridays is his day off. He may be here, but he's not gonna engage because his stats say his personal trading, blows on Fridays. So okay, and it doesn't matter what the market's doing, you know. So yeah, I agree. That's like it's that mind. Yeah, yeah, that's that mindfulness. Again, knowing yourself, knowing what what your bandwidth. Like for myself, now now that the good weather is even starting to come back now. But even during the wintertime, I was, dressing warmly and I was taking my 4 to 5 mile walks, during lunchtime. It's going to be nicer now since the warmer weather is starting to come around. But just getting away from the screens. You just got to. I mean, my bandwidth is wiped out by noontime, a lot of times. So just got to monitor your own situation, let alone monitor the market. Market's going to be there. And that's another thing I learned. Years many years ago, market's going to be there. Yeah, I need to make sure that I'm in top shape for there. And even, even doing all that you can do, I mean, you just do all that you can do, to put yourself in a proper state, for success. But, it's just grinding it out in front of the screens all day long. Yeah, all right. No, 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 because I usually recharge before that. But uh I'm dead by 2:30. But no, I mean, you just gotta just gotta recharge. No, I know. You just gotta recharge and know your limitations. Market's gonna be there. It doesn't care whether you're there or not. No. No. All right, cool. I'm gonna be cutting out soon around 11 a.m. I get some a couple appointments shortly thereafter, and I think today so far, we again didn't do a whole lot. All right, it's just one of those days on a cycle too. We're just kind of chopping back and forth. Um, but I think we got some good discussion in, anyways. It's always positive discussion. Yeah. Yeah. No. Yeah, yeah, I'm cutting out an 11 today. I got a few things I need to do, and then I get an appointment a little bit later, so get prepared for that. All right. But again, we're talking about bandwidth, right? Manny was before you stepped off. Again, that's the same thing. Like, I mean, many of us here, we've been going since early this morning, and you reach 11 o'clock here. Again, most of the better activity is up through 11, 11:15, 11:30. And then it starts obviously. The day is the ranges, at least the initial balance ranges and so forth are set. And there could still be some very good trades to be had, no doubt. But again, the I find the opportunity to start tightening up, and that's when the unforced errors. How many of you have had unforced errors, right? Yeah, unforced errors, right? Yeah, and that's the thing. That's probably another thing in baseball, right? There's so many. I try to avoid as many unforced errors as possible, right? So unforced errors happen. It's like exactly what you're saying, Manny. It's like when you lose the bandwidth, right? And that's the same thing. And it's the same thing when I'm flying, right? I have a limitation on how long of a trip that I'm taking, that I'm going to be involved in, because it's not just the flight time, it's the preparation before, of a flight. And then of course the flight itself, and then of course conditions and during the flight. I mean, the tougher the conditions, the more bandwidth you need, and but the faster it drains, the battery, right? Bandwidth battery. So I think it's the same thing with with flying, with trading as it is with my flying. Is I need to have good battery, bandwidth at the end of the flight, so I can make a challenging, instrument approach in weather down to a successful, landing. Okay, I need to have probably my highest bandwidth at that time, but it's not. It's actually at the lower end of my bandwidth. So I think with trading is the same thing, where you're sitting in front of the screen for a fair amount of time, and you're putting a lot of effort into it, and hopefully good results. But when your bandwidth starts, the battery starts getting low, you just gotta be aware of it. I wish there was some sort of a, well, maybe there are with the Apple watches and things that you just, maybe there's a way of, I don't have any of those Apple watches, but maybe on one of those Apple watches there's like a little warning of, that can sense when your bandwidth is actually depleted to a certain point, and then send an alert to you on the phone, on your wristwatch or something. There could be something like that. Hey, maybe we can develop something. Make multi-millions. So, yes, nice, excellent. Uh, I do, I do, but as long as you get cleared, from a medical, you get your medical certificate. You should be fine. I have buys, right? So when I'm looking at the instrument panel, because it's closer, I need that magnification versus the distance. You know. So yeah. Mm. T-Blitz says the aura ring tells you you are under stress, and then JB says smartwatches detect the war in one of high stress levels. Oh, okay, great. Yeah. So maybe, so maybe that would be something good, for somebody that, tends to have, cortisol levels or stress levels where, you need to be warned of it, I mean, I'm aware myself. I'm very mindful. It's over the years. So, but if it's somebody that, yeah, it tells me time to take a walk. That's why, I have started last year. Uh, yeah, last year, I think I started in late April, early May. Um, I worked my way up, but I'm up to 4.5 to 5 miles, daily, or at least 5 times a week or so. And not only helps, I certainly lost some lbs on that, but just getting away from the screen and breathing the air, and just it's just so much better. Then I can come back at 2:30, for this latter part of the day, and generally I'm not going to put a trade on anyways, but you know it's just kind of like I look at the market fresh again. So you know who has the polar? Is it you that have the polar? Somebody has a polar in it. Oh, maybe it's Neil's. Neil's has the polar where what you do is it's a strap around. I have it actually. You have a strap around your. It's mostly for people when they're walking and stuff, so they monitor they monitor their heart rates while they're walking. But you can do the same thing. You can kind of strap it around your mid chest area, and that will be this. I think it sends a signal to your, yeah, it sends a signal to your phone. And so that's another way, of seeing, like when you're in a trade, right? You can feel in you can feel your blood pressure go up. Particularly if it's going against you. You can feel that going up, but you want to get it to the point where when you're in a trade, it's 60 beats per minute, you know, and it's like it doesn't really matter. And perhaps a lot of that has to do with position sizing too. I'm sure everybody's noticed it here. The larger you go in a position, again, why? Is more as it you have at stake, right? So, then it again, then all of a sudden, you're deliberately elevating your stress levels. So, yes, we want to push the envelope at times, but you got to stay in your lane. You got to make sure that you're comfortable with whatever the outcome is. And yeah, I could have a smaller winner, but at least you don't have a larger loser. So it's just that balance all the time. So you got to be aware of that. Yeah, working out in the morning, I mean, whatever it takes. you know whatever it takes. It's really important. Yeah. Yeah, yeah. Dan over here says, sun is out in the morning before the market. Hit a vitamin D, right? And sun. Again, it's just recharging. Yeah, it's great. It's so important to take care of that physical, because then it takes care of the mental, and then you perform at a higher level. Um, I'm going to come off mic, but I'm going to readjust my charts. I'm going to keep my charts up for the room if you want, in the pit room. You can still continue to see what we're doing over at the PTG level, but I'm going to come off mic myself. And if anybody had, I'll be in and out, but if anybody has questions in the pit room or discussion, I'm still around. I just won't be on the mic. So, all right, guys. Yep. All right. Have a good day, Manny. All right, guys. So I'm going to just readjust my charts for.